it kind of feels like we're building Netflix, the Netflix we know today.
Amalgamating all of the world's data and then contextualizing it and generating unique, useful insights.
Well, it's actually increasing my productivity by at least 20%.
We're on a mission to, help as many startups as possible with the smallest possible team. We're working on some crazy projects right now where in theory we'll be able to help hundreds of startups with, our team of 4 people.
One of the biggest concerns about the economy is that they don't have sustainable population growth.
Here's a big one that few people talk about, but I think it's going to be one of the most transformative shifts. Hey everybody, Mike here with another episode of Startup Talks, and I've got the great Ben Su with us today, one of the founders of Capita, which is a Web3 startup. We're really excited to hear what Capita's been up to. Ben, how's it going, man?
Very well, very well. Well, you got my name right, but I don't know if I agree with the whole great characterization yet. Still working on it.
Come on, man. It's about visualization, right?
All right.
So yeah, how are you doing today?
Yeah, I'm doing fantastic. We obviously had that, product talk before this. So it's just like a typical day for me, product, customer acquisition, and so on. The typical founder's life.
Yeah, totally. Let's jump into it. What is Capita? What are you guys working on? And how are you guys trying to change the game for investors with your product?
Right. So investing is traditionally people heavy and software light. So what that is turning into is investing is actually quite labor intensive. The lawyer, the accountant, the consultant, and so on. So what we're doing is essentially refactoring venture investing with, technologies such as, Web2 and Web3 based technologies. So we think that investing operations should be much simpler than they currently are, and should cost less to deploy capital. And that's what Capita's mission is on a big vision level.
Okay, that's great.
Mm-hmm.
But let's answer some fundamental questions. One is probably going to take like 20 minutes to unpack, which is what is Web3? But first, give us a sense of like how much it costs to currently, what are the problems with raising money currently? Like put some numbers to it. Give us a sense of like how painful it is both for the investors, maybe even the startups, and the different people
Mm-hmm.
involved in the process. And then we'll leave the big question, the big hairy question for after.
Absolutely. So what I must say is that, any serious venture investment, it has a minimum investment threshold, right? So it's kind of like you need to write a big check in order to get the opportunity to participate in investment rounds as an investor, right? So what the cost is currently looking like is usually when people pull, say, $50,000 to $100,000 together into what we call a special purpose vehicle, an SPV, the cost can range anywhere from $10,000 to 20 or even 30 of legal costs, fees going to lawyers and the middleman. So, and you can see how stupid that can be in certain times. You're deploying $100K and you're telling me right at the get-go you're taking a 10% haircut, right?
Yeah.
So
goes all to the middleman.
Yeah, exactly. So this is not to say that you have to invest as a group. In fact, I know most startups, when they raise from friends and family, business associates, they don't, put them in the same SPV. But the particular segment that I'm referring to are usually companies that are raising, for example, have a lead investors that are institutional investors. some companies that are on the more serious side of capital raise. So it's typical for them to keep a clean cap table and not have, individual shareholders who put $500 in each on the cap table. Yeah. So it's costly, labor intensive, and time consuming. Currently, that's a status quo.
Big pain points
as a group. Yeah.
Okay. Yeah, fair enough. So you guys are going to come in with your solution at Capita, and you're going to make it less costly, less time consuming, and just overall less friction in the process. So obviously, from a startup perspective, this applies to almost anyone who's raising money, right? For any kind of investment. Are we talking like specifically for startups, or can they buy? Can investors expect to buy things like digital assets, which are becoming more important these days, more prominent? What about real estate? What about all these other things?
Yeah, so you bring up a very good point, and I think you probably hear this a lot of the time. One of the biggest struggles for early stage founders is the ability to focus. In fact, I was actually reminded of a tweet about Steve Jobs in the early days of Apple, is that the ability to focus for startup is like a superpower. And What does focus mean? Focus means, when every bone in your body tells you that this is a good idea and you still say no. Yeah. That is focus. So, of course, there are a lot of, opportunities in different asset classes, including digital asset or real estate asset classes. But we're exclusively focusing on, we're primarily focusing on startup investing for a number of reasons. Number one, we think that startup investing investors are much more forward-thinking. So they're much more likely to be the innovators to adopt new technology and new ways of doing things, right? And the strategy that we're having is we want to prove to the innovators that they can trust us and they can rely on us to do their investing journey. And we want to use the track record that we're able to build with these innovators and demonstrate to the early adopters. Maybe the early adopters could come from the real estate asset class or some of the more traditional asset classes. We want to be able to walk up to their office and say, hey, look, we already moved millions or hundreds of millions of investment on our platform, and this is a result. So I think that would be a much easier sell later on.
Yeah. Okay. Yeah, I buy that. So I like the hyper-focused approach on finding the most likely people to adopt your new way of doing things, which is always a little bit harder. And speaking of which, you guys use Web3 at the core of your product. So, for one, define what Web3 is, and how exactly do you guys use Web3 as an advantage in the Capita product to help raise funds?
Right. So I want to kind of maybe share some updates. Is that I think that it's probably very typical for you to see in the startup game, is that founders are typically in the situations of adopting to the data that they're getting. So I would say for the past, we've been building in a smart contract Web3 powered operating system to automate investment operations end to end. So you're able to onboard investors using smart contract, and these investors are able to inject capital in exchange for ownership interest into that investment organization using smart contract. And the group together can implement certain governance mechanism to deploy that capital. And when the capital is generating return on investment, the distribution of that ROI can be automated using smart contract too. So the vision was to automate investment operations end to end. But through that journey, this is what we found. Is that it kind of like the analogy we use internally is that it's kind of it kind of feels like we're building Netflix, the Netflix we know today, before broadband internet took off. The reason why I'm saying this is because, number one, not many investors who have big pockets of money, not many of them own a crypto wallet. So there's a very significant headache that we had to
barrier.
Go through.
Exactly. There's friction there. Yeah.
Yeah. It's like when you try to build Netflix in the early 2000s or 1990s, and you have to go to your user's house and install broadband internet. So just for the people listening,
and for the people listening, before Netflix, became the over the internet distribution business of today, they were shipping DVDs by mail. Like that was their core business, and I think they dabbled in flicks over the internet, but at 2% they were testing. And it's only when internet speeds and bandwidth capacities went up that they were able to make the leap and, go all in. But they were well positioned from the get-go to be able to do that because they had, a certain customer base, they had a certain brand, a portfolio. I don't know if they had a portfolio of content yet, but yeah, anyways, it's interesting. So we're witnessing basically you guys as a founding team going through the realization that, maybe we're a little bit early in pushing, this particular technology solution. So now, from what I understand, you guys are kind of reverting to something that's a little bit more analog, building, a customer base, building more assets under management. And with that, kind of like Netflix, you can ease in to flicks over the net when broadband becomes available. In your case, when more people readily have wallets, crypto wallets, so that and they're used to using and transacting with them. Is that right?
Yeah, absolutely. So absolutely. So we actually have done a lot of customer interviews, and we really listen to our customers. And when we try to push the entire, Web3 powered operating system to them, usually the buyer, they get very excited, but then the users, is where we run into some problems. Like I said,
Classic.
Investing is kind of I would say, unique industry to be in, because it's kind of like the old people, the older generation, the boomer generation that have way more disposable income to invest.
Yeah.
So it's kind of the whole saying, you're always building for the user, not building for the buyer. So we really prioritize the users and their needs and their situation. So we wanted to avoid the typical trap for startup where you build a solution and try to fit that solution into some sort of problem, and sometimes it's not a perfect fit. But in this case, we wanted to go to the problem and think about what is the value proposition that we can offer, and work our way from there and say, hey, what is the path of least resistance to deliver value to our customers and users? And we arrived. Yeah, and then we arrived at a situation. It's actually a pretty exciting time for Capita. We arrived at a situation where we launched a Web2 powered product in June, and I think Mike, you were actually my co-founder Nick actually worked inside your office, and he got a call from a customer when he was working inside the IIG office. And I think he shared the news with you. So we onboarded some, really fantastic institutional investors with our Web2 product. Yeah. So
unfortunately, you can't say the name. People would freak out if they heard who you guys were facilitating investments for.
Yeah.
Okay.
Yeah. Of course. Yeah. Yeah.
Okay. So, awesome. Now, Ben, what the hell is Web3? Every person I ask seems to have a different explanation, perspective. What is Web3, if it is something at all? Just do your best.
Right. So I think TLDR, Web3 is the next generation of internet. But personally, I'm a huge nerd for investing and finance. I think Web3 is the next infrastructure, next version of infrastructure for investment and finance. So, what does that mean? This means is that we're taking out the toll takers, the middlemen, the lawyers, the accountants, uh, and we're taking out the uncertainties in whether, hey, in the uncertainties in investing. So, for example, when we don't know where our money is going in the traditional investing world, a lot of the data on the derivative market, you actually don't know how much money is going into that market. So, as although I think rather investing should be as transparent as possible, so that investors can have a good idea of best idea of allocating their capital and where the capital is going. So I think that's what Web3 is doing, and I think at the end of the day, it's not just like about cutting out the cost, but or it's not really just about transparency, but also it's about knowing that the capital you're deploying for a certain application is actually going there without some third party
Yeah. Transparency.
FTX cuff, yeah,
Yeah.
misallocating funds and not putting
Well,
the
it's
money where
important.
it's supposed to be, right?
It's really important that we pause there and make the distinction for a lot of people who are new to Web3. FTX was a centralized entity that was taking risks on behalf of its customers, with their money. But true Web3 finance applications, call it decentralized finance, DeFi, there is no intermediary. It's peer-to-peer, and what lies in the middle is, correct me if I'm wrong, but it's like a smart contract that rests on top of a blockchain that's transparent, immutable, decentralized in the best of cases. So is that more or less right?
Yeah, absolutely. So I want to say this. You bring up a very good point. So the whole FTX, Alameda Research, Three Arrow Capital scandals that we've seen in the past 2 years, they have nothing to do with Web3, but rather these are the opportunists that are riding the Web3 hype train and trying to make millions of dollars off the back of innocent investors who are now victims, right? So I'd say, especially FTX situation, what really happened was there was no smart contract that's governing their fund or the capital that they have that they're holding in their custody for their customers. In fact, it was more of like a handshake, caveman handshake deal. Say, hey, let's shake my hand and trust me that I won't run away with your money or spend it on $100 million real estate. And my parents saying that, right? So that's actually predate the way things were going in FTX. I would say it's a system that predated the whole corporate law, securities law invention in the 1800s. It was actually going back to the old ancient stone age of how investing was done.
And so few people understand this, and of course the media, the way that they portray it, always mostly in a negative light. It's like, that's Web3, that's what you're getting into. And not to say that there are some straight up scams among the 30,000 or so cryptocurrencies. But you have to be careful, because sometimes it's not what it seems, right? These FTXs and BlockFis, they're custodians. They're centralized entities that are taking the responsibility of handling your money invested, and they can take risks, with that money, and that's what has to be. That's what we have to be careful of. We have to make the distinction. It's not Web3. Web3 would be a decentralized solution with no intermediary and no counterparty risk. Okay, so I just thought that was important to underline.
Yeah, absolutely. So I actually got the feeling. I think in Bitcoin Miami. When I asked
Yeah, we were
the
we were there a
Web3
few months
founders,
ago.
yes, when I asked the founders, some of the Web3 founders, of course, like there are a lot of, I would say, brilliant and trustworthy founders that really bring me confidence in Web3 as a whole. But there are certain bad actors in Web3, just like Web1, Web2. Whenever you have a
Yep.
new paradigm shift technology happening,
Yep.
you will always get the
People try to
optimists that
exploit
are
it.
trying to steal money. Yes,
Yeah.
and this is no different.
Exploitative people.
Yeah.
Yeah, exactly. But the more we educate people, that's kind of the purpose of this podcast. As Institut Innovation Gatineau, IIG, tries to help more Web3, founders and build up a Web3 ecosystem with Web3 Auth, among others. Education is a big pillar, and that's why we've got people like you on here to kind of dispel the myths and propagate truths about the space. So, what is something in Web3 outside of your field that really excites you? When I say your field, I'm saying more like the investment side, but like what else is exciting from a technology perspective?
Right. So, I mean, from a technology perspective, as well as like from, I also want to bring another element to it is the macroeconomics perspective. So, I'm a big nerd of history and also a big nerd of technology. So when you put technology and history together, I get even more nerdy out. So yeah. So I think it's like extremely awesome time to be alive, especially with, investing in technology. So one thing, with the rise of the GPTs, right? So we're able to kind of lower the cost in doing a lot of things, especially in software development, technology development. So there are VCs out there, VCs from the All In podcast saying, hey, I used to write a $1 million, $2 million, early stage venture investment check and need a round. Maybe now I only need to write a $500,000 check and I don't need to raise a big, $500 million fund. And the reason is because, founders are able to build their MVPs faster and in a less costly way. They don't have to go out and hire 20 10x engineers and poach them from Google. And maybe with the help of Copilot, one engineer can achieve the same productivity as maybe three, right? So I think that's extremely fascinating thing to witness at this moment.
And
that's number one.
And that concept is known as deflation, right? Technology tends to be deflationary. So things get cheaper, faster, all of this. And even though there's inflation in the economy because of the fiat monetary system and the fractional reserve banking system, you've got technology kind of pulling on it in the opposite direction. So everything tends to get cheaper. Actually, when I say everything, that's not true. Mostly technology-based stuff. Whereas like commodities and investments tend to get more and more expensive and less accessible over time.
Right. And I want to kind of like finish off on my additional piece. Question is the macroeconomics, right? So in the past decade and plus, what we're seeing is the whole 0% interest rate, cheap capital everywhere. It was actually more difficult to build startups. I remember when we first raised venture capital funds to build capital, we were like, okay, how do we actually hire good engineers, right? Like good engineers, they're getting paid $500,000, $300,000 at these, super well-funded startups or Google, Microsoft, of the world. So how do we actually compete with that? But I think we got lucky there because number one, that competition was kind of like, reduced because of GPT, but also because there's no longer free money flowing around. There's no longer people with a shit ton of cash just hoarding talents, in the technology space.
Yeah,
So
like Google, Facebook, and Microsoft and these big tech companies, they let a lot of people go, which flooded the market with more talent.
exactly. So I think it's like a very interesting time to be alive and also to be a founder who's trying to build a product for the venture and angel investing sector. We're
Yeah,
seeing, yeah. So we're
you
seeing,
guys are in a
hey,
cool space.
yeah, exactly. So I mentioned that, $200,000 could probably give a startup enough runway to build a really cool MVP, which was unimaginable maybe a year or two ago, maybe 2 years ago, right? You needed to
Yeah,
raise at least like, 7 figures to do that and hire 20
yeah.
engineers. But now
I
it's
think
like,
we're,
hey,
I think we're both in the
yeah,
in this in the good, the right sector to benefit from this, right? As an accelerator manager, and you guys as a fund manager in a way, um, we're all going to benefit from having more startups more startups emerging because everything gets cheaper to make.
yeah, exactly. So, so startup fundraising size is noticeably, you know, becoming less inflated. And also, I think from the investor side, what we've been witnessing, just kind of like firsthand data, is that 2 years ago, 3 years ago, during the bull market, people didn't really care about cost of capital that much, right?
Mhm.
But now, because of the rising interest rates, people actually care about, hey, can I lower the cost of deploying this capital?
Yeah,
When I'm writing $100,000 check, I don't want to pay that $10,000 SPV fee to some
yeah,
lawyer or accountant, right?
yeah.
So this is where we come in. We think that software is eating the world, and it's also eating the world of fund formation, investment group formation, and investors actually care about that now
Mhm.
in terms of reducing the cost of capital. So I think it's especially exciting to be building a fintech startup that focus on fund formation
Mhm.
in a recession. It may sound counterintuitive because I actually make a joke with my co-founders, and I say, "Hey guys, guess what? We're building a fintech in a bit of a recession," and then we just laugh about it. But now it's actually, I think it's actually a bonus. It's
Yeah.
a, yeah.
No, I can totally see that. Um, you mentioned AI earlier. Some
Mm-hmm.
people have trouble understanding if AI is part of Web3 or not. Like, how do you see that?
Well, I mean, I see AI as this like standalone technology category. Uh, Web3 more so. I think it's I do see like the convergence of the two technologies. So, for example, for what we do, which is investment fund operating system, there are investment funds out there that uses some sort of algorithm or AI to make
Mhm.
capital allocation decisions, right? So, um, but so my CTO actually has this vision in that one day we will have a AI plus Web3 smart contract investment fund where there's completely zero human involvement
Intervention. Yeah.
in the capital allocation and investment of
Why not?
capital. Yeah,
Yeah, I can see
because
it.
you know what, like 2021, 2022, without those, we were talking about whole FTX, Three Arrow Capital, Alameda Research. I looked up some numbers. I think like the capital markets lost a total of $44 billion to these, we call it human, to the failure. We call it human error failures,
Yeah.
right? Doesn't matter if it's intentional or unintentional, or it doesn't matter if it was done with malicious intent or
Mhm.
not. But we think that humans are actually not very good in doing certain things than machines. So you know
And
I may
vice
have a lot
versa
of, yeah, yeah. But I
for
think
now.
in investing, I think it's kind of a space where you have to eliminate as much emotion as possible, and then you have to
Yeah.
eliminate a lot of subjectivity as much as possible. So I definitely see, a future where AI and Web3 converge to make investment industry better in certain ways.
Yeah. Well, I think you got it right. I mean, AI seems to be this layer that enhances all aspects of the internet. But by that measure, some people put it in the category of Web3 because, it's like, as you said, it's very broad. It's the next iteration of the web, right? Mm-hmm. And so then people loop in AR, VR, edge computing, AI, and things like this. But if I had to, put a little bit of a definition on it myself, I would say that it's transitioning the web towards more decentralization, private data ownership, like being able to own your own data as opposed to having it in the hands of, either institutions or private companies. And also the contextualization of data. And I think that's where AI comes in. We've never been able to amass and organize and understand data on the scales that we're doing it now. Like, just look at what OpenAI is doing with ChatGPT, right? Their large language models are just getting bigger and bigger by the generation. And ultimately, right, what's the culmination point here? They're just going to be like amalgamating all of the world's data and then contextualizing it and generating unique, useful insights and just useful everyday things like, I don't know, I asked ChatGPT to do the most banal things, like sometimes just calculating at this point because it's becoming so useful. So yeah, I just wanted to know what you thought about that.
Yeah, I definitely agree with that. And I chat with my CTO about this on a frequent basis as well. And, we before we founded the company together, we're actually friends. And at the time, when GPT-3 first came out, he was already on a wait list to be one of the first people to use it. And he was telling me that, so he was actually one of the beta users for Copilot. And he said, hey, look, GPT-3 powered Copilot is actually saving me. Well, it's actually increasing my productivity by at least 20%. So,
which is huge. 20%. Right. It's like what?
yeah, exactly. And think about it. It's like if you early stage startup building, majority of the cost is going to the development cost, right?
Yeah.
So if you're able to have a 20% increase in productivity in the human resources, it's kind of the same.
It's like you raise 20%.
Exactly.
Yeah, exactly.
Yeah. So.
It's wild, man. And I would say that was back then. That's what your CTO. His name is Aaron. That's what he said. But now I'm pretty sure people are getting even bigger gains. And I can say that personally at IAG, we're on a mission to help as many startups as possible with the smallest possible team. And the only way to do that is going to be by integrating AI at every level and automation. And, we're working on some crazy projects right now where in theory, we'll be able to help hundreds of startups with, our team of 4 people, which is crazy because this would not have been possible in 2018, 2019, right? At all.
Absolutely. Yeah, absolutely. So I came from a traditional labor intensive industry. I was trained as a lawyer. I'm still a licensed lawyer. So,
wait, you're one of the middlemen that you were trying to replace.
Yes. And I felt bad. I felt bad billing people thousands of legal fees simply by using some template and doing some repetitive
crazy,
work.
Man.
I get enjoyment out of doing challenging work, and I think challenging work deserves to be compensated accordingly in the amount of value you're generating. But my opinion on a traditionally labor-intensive industry such as law is that it's not sustainable. Most people who desperately need legal services cannot afford it. And I think technology is probably the only way to break that unsustainable cycle and actually give access to justice to people who actually need it.
Yeah, I fully agree with you. And we've talked about this on the pod before, but there are certain industries that are just going to get absolutely wrecked by these emerging technologies. And now I'll come back to the two main ones we talked about, which is, Web3 / blockchain and AI. Let's separate them out. Between the two, if you look at the middlemen kind of careers that'll be impacted, lawyers, accountants, real estate agents, as soon as you can put a house deed, like the proof of ownership of an asset, of a physical asset on the blockchain, and you have like efficient distribution channels to sell it, maybe that's more the challenge here. Real estate agents are gone. Here's the big one that few people talk about, but I think it's going to be one of the most transformative shifts that Web3 really pushes, is going to be government. So like government is basically the biggest middleman, right? It's the biggest middleman. And someone said on a podcast the other day that like most of government activity is insurance. Like most of it is insurance. Like whether it's
health insurance,
pensions,
right?
Health insurance. Yeah. Like a lot of that stuff. And that can also be relegated to a smart contract, potentially, eventually. And so what happens, Ben, when all of these careers that we just mentioned go away? What happens? I know it's not going to be from one day to another, but it's inevitable, as we both agree. So what do we do? What do those people do? Maybe that's my question.
Right. So I'm actually not worried about, having excessive supply of labor, because what we've been witnessing on a macro level is that
there's a shortage of labor.
There has been a shortage of labor, right? Right. So on the macro level, you look at countries like Japan and China. One of the biggest concerns about their economy is that they don't have sustainable population growth, right? So I think from the kind of like the macro level, that should not be a concern. And also, if you look at technology advancements, right? For example, something as simple as Calendly. Calendly automated away secretaries to book your
schedulers. Yeah, that's
exactly.
Right. Yeah.
So Mike, if you were to run an organization as big as IAG back in the 1980s, you probably needed to hire a secretary.
Yeah. Right?
But now
with all of the meetings that we do. Yeah.
Oh yeah, 100%. And now you just do Calendly integration with some sort of Google Meet or Zoom. You effectively automated away the secretary job for your organization, right?
Ben, I can't agree with you more.
Yeah.
Sorry, I'll let you finish.
Yeah.
But I can't agree with you more, like in the sense that, and if we liberate those jobs, then we'll be able to allocate human capital, intellectual capital, towards way more productive and creative things that'll advance the human race even more, as opposed to occupying, I don't know, like middleman positions are not that productive, are they?
Yeah, 100%. So I would say this, when you have more supply in labor, I don't see you're kind of like creating, big unemployment situations like some of the people are alleging. But what we've been witnessing is that the more automation we had as a society, we actually become more productive, right? So so that's one. And the other thing is that
board.
And I think like we need to think about where are we, how and where are we going to create additional productivity, right? As a society, how do we create these additional outputs? Because if you don't have growth in productivity, everything becomes a zero-sum game. Shout out Peter Thiel. That's a quote I stole from Peter Thiel interview.
So true.
And I 100% agree with that. And what you and I were doing, so I'm trying to, with Capita, I'm trying to automate away the middleman from the investing process, right? And then you are using, AI, GPT to automate incubator services so that you can empower more entrepreneurs and more founders, right? What we both are doing is that we're becoming more productive. We're creating more. Hopefully, we're going to be able to
More
create
wealth.
more value. Yeah, more wealth,
Yeah.
more value, more wealth for the society, and that society is a much better society to be in, where that society is growing, and that society is a much better society to be in than remaining in a society where everybody's fighting as if it's some zero sum game.
Exactly.
Right? Yeah.
Yeah, zero sum is the enemy at the end of the day, right? A pie that's not growing means everyone's fighting over the same pieces. But technology's always been
your win will be your W will be my L, or vice versa. My W will be your L.
Yeah, exactly. But let's all win together. That's kind of that's what I love about this space. It's positive sum. Two people can win together. Like it's just incredible.
Or we could be winning bigger because two people are working together, pulling in the same direction. Then we would separately, right? So
maybe something to like summarize all this, because unfortunately we'll have to stop soon. But Web3 and adjacent technologies, put AI into that. They are aiming to make the world a more just place, growing the pie for everyone, sharing the gains in productivity with more people, and less of it is going to be captured by middlemen, which sucks for them. But we think that they can be reallocated. They'll find jobs that have a higher purpose, more challenge, more value to society. So everyone wins again from that. So like, is there anything bad about Web3? Is there anything bad about, the coming AI wave? I mean, don't go all Elon Musk on me just yet, but
well, I mean, I'm definitely biased because I've been a long time, Tesla fanboy and Tesla shareholder. So I definitely, I definitely would buy every single Elon Musk candy that you sell me. But in terms of Web3, I do think like on the short term, there's a lot of uncertainties that I personally am concerned about. For example, the recent Ripple Lab v SEC litigation, or SEC v Ripple Labs. I think it's actually creating more uncertainties than than we thought the case would bring. So I think like if the court's decision were to solidify into some sort of norm, I'm actually concerned about, at least on a short-term basis, that Web3 will be continuously be exploited to steal money from the small retail investors. Just for some context, so what the court was saying in that case is that, hey, it's not a security, it's not you didn't violate the law by having those tokens sold on some sort of public exchange, but it becomes a security and regulated under law when you sell it to the big institutional
institutions. That sounds so backwards. When I read that, and you helped me understand, I was like, how is it not the other way around? Where the retail investors need more protection than the institutions, who should be able to make their own assessment about the investments that they make.
Right. So I am worried about, just like maybe, luckily we're in a macro downturn. You won't see these like ICO waves like what we observed in 2017, 2016. But I am worried that if a bull market were to happen and this court decision becomes status quo, how many more victims are we going to have because of the opportunists are piggybacking Web3 to exploit people? So that's my primary concern. Yeah.
I'll finish on this big question. If you were the judge on that case, the Ripple v SEC, how would you have judged it differently?
I would say in court, it was probably not the best venue to give people, or to give folks like you, who is like a Web3 enthusiast, the answer that you needed. I would say a much better venue is actually going to be at the legislature level or at the regulator level to create, a regulatory framework that actually is not a carbon copy of I think it was a 1947 decision, like the Howey test,
Really?
right? Yeah, it was from either it was after World War II, in that era. So uh, I would say, so the court was applying that law that was made uh, decades ago into what's happening today. So I actually give a lot of I would say kudos. I would give a thumbs up for the judge for actually going through that intellectual exercise, just applying existing rules. But I just don't like the outcome because the outcome I see a lot of vulnerabilities for retail investors.
Yeah.
So I would say
And
my
they're the
answer
ones
to
who need
your
the most
question
protection.
exactly. So my answer to you is that shouldn't be the court's job, but rather the legislators. They need to step their game up and come up with a strategy to create a fair but also efficient
Yes.
industry for Web3.
Amazing. I don't think we can do any better than that. I think we should end it there. Thanks a lot, Ben, for your time. I think this is going to be the first of many podcasts that we do because there's a lot to talk about in the space of Web3 and investing in startups. So thanks again, man.
Yeah, looking forward to it.